Amisha Vora, Chairman and Managing Director at Prabhudas Leeladhar, joins us on the show. Hi, Amisha. Good morning. Good to speak to you. Well, Amisha, let's focus on the sector that's disappointed in the last few days. That's the tech space. Now, the debate is out there that some of these stocks have seen a sharp correction, but valuation-wise, they could be providing an entry opportunity for a longer-term investor. What's your view on the big tech companies?
So one is that markets right now in a very unpardoning mode. That's how the reactions to any disappointment will be very sharp, and that's what the beginning we saw, and I think this trend will continue. But within the sector, and particularly the disappointment which Infosys saw, I think one of the reasons was in the December quarter, highest addition was done in this stock. So that means it is what has come is a complete surprise to market in one of the widely held, widely covered stock, and commentary is no great. So overall, I think that this little coldness to the IT stocks in the portfolio weight will continue for a while longer. But coming back to the fact that are they at a price where a lot is discounted, I would say yes. So the time consolidation will continue in the stocks, and the real price upside will be little away. Downside could be limited is the only thing that we probably know at this juncture.
All right, so you're saying if the downside is limited and perhaps the worst is in the price, Amisha, is this a good time to be buying IT stocks? I think that's what, my colleague Nigel was also asking you. Because, with now the kitchen sink thrown at the IT sector, one seems to believe that what else can go wrong, right? Your thoughts? Is it a good time to be buying?
Right. Well, you're right. But the fact is in December quarter, everybody went overboard on Infosys in particular. And IT was also gradually becoming from huge underweight to neutral. So having that act being done, even if the price is good, it's going to take time before you increase your weight is what I'm trying to say.
Okay, that's the thought on the IT sector. Amisha, hi, good morning. Yesterday we saw some evidence of it. Money was quickly trying to move away from IT, and I think banks were the big beneficiaries, right? Even tier 2 banks, PSU bank stocks were up 5, 6, 7% yesterday. Now, while that's a tactical move, purely from a more fundamental standpoint, an investor standpoint, would you allocate incremental money to financials? And if yes, then what kind of stocks? I mean, we've seen numbers from HDFC Bank, for instance. So do you go there to the tier 1? Do you look at tier 2?
So on a slightly macro basis, if you see, last 1 year and particularly some of the last few months also, we've been continuously seeing FIs selling. And with that, a lot of pressure used to come on banks. Plus the global banking crisis also led little more pressure on banking. So while our credit growth, NIM and asset quality continues to be robust and good, banking sector was at a receiving end. So basis that switch also, I feel that it is more a domestic sector as compared to IT, which is a global sector. And the overweight stance in banking particularly will continue, and so the stocks will do well. Now, coming to HDFC Bank and its numbers, it is trying to prepare itself for the very large merger. So we continue to see how they build a little more cash, how that continues to have an impact on their NIM. And as compared to most of the other private sector large banks who saw their NIM expansion by 25-30 bips this year, HDFC Bank saw just about 10-12 basis points. But going forward, as gradually we leave the merger uncertainties and preparations behind, which will still take time, I guess 24 will more or less go into that. From 25 perspective, we still feel HDFC Bank on a merge basis has almost 15 to 18% still on the table for investor. In the short term, we still have, or rather the medium term, we still have ICICI Bank as our top pick.
All right, Amisha, what about Z? I don't know whether you're tracking this one, but Z, yesterday you had a large trade. Some would believe maybe it's the last, big trade before we get through to that merger. And the hope is that it actually takes place, it gets the green signal from all the regulators. What's your view on the stock? Valuation-wise, well, it's attractive, but it's always been attractive. There are risks on the table as well. How do you approach the stock in this 200, 210 odd range?
So as what you very rightly said, that the valuation has been attractive, probably at 250 also before the whole fiasco on, IndusInd Bank and other things happened. I would still say that at around 200 levels, a lot is in the price. And it is a very large franchise. And post the merger, it will become a dominant franchise. So the pain might continue in the very immediate short term in terms of price. But if one takes a little medium term view, I think this is a very good level for the stock.
All right. Amisha, I do want to, I want your views on a whole host of other sectors like autos, etc. But I'll just come to that in a bit. The other news flow that we're discussing is on crude. Let's talk about some sectors that could be in focus and some stocks as well. The auto space could be in focus today. Very interesting note from CLSA put out this morning, where they are now getting constructive on the sector. They met clients across, different parts of Asia, clients in Hong Kong, Singapore, etc. And the clients are positive on the auto sector for a couple of reasons. One is the recent stock price fall. So they believe that this is a good entry point for auto names. And the other is the resilience as far as demand is concerned. Clients are also optimistic on the fact that there is an EBITDA margin improvement expected in FY24 because of the fall in commodity prices. Now, a couple of more things. In the four-wheeler space, they prefer Maruti Suzuki and Tata Motors. In the two-wheeler space, clients like Bajaj Auto, because of the dividend yield, performance. Also, it's a 4% dividend yield that they're looking at, as well as the upcoming launches from Bajaj Auto stable, which could be positive triggers. Now, for Tata Motors, there's an improvement, a clear improvement in the Jaguar Land Rover business, and the strong domestic business has also made clients positive over there. So I want to get Amisha Vora into this conversation. Amisha, we were discussing this a while back, but particularly on names like Tata Motors, I mean, these are stocks that have not done much for investors in the last couple of years. Do you think that multi-year lull period has now come to an end? And if yes, what are the stocks that you like?
So one is that when we talk about within India, in India in particular, that there is a rate hike pause. The rate sensitives should do well, and auto is one amongst them. We also see that there is a huge amount of spending continuing on infrastructure, which definitely has a lot of multiplier impact. And lastly, in the election year also, as we know, a lot of spending will increase. Having said that the macro is good, coming to Tata Motors, for them, opening up of China and China doing really well will also matter a lot. So while in India, their EV business is continuing to do really well, the global business has a big leg in China, and that bouncing back will also help the stock. So all in all, I feel that yes, we are overweight on auto substantially as a house. Within that, of course, we like Maruti also because of their product launches, as also the space that they are in. And in the commercial vehicles, we like Ashok Leyland. But Tata Motors, because of the additional play on China opening up, plus the domestic EV space, we like that.
Okay. All right. Talking about Tata Motors, let's talk about another Tata Group company. Sonia is joining us to tell us about Tata Chemicals. There have been price cuts out there. And yesterday, we won't get the intraday chart, but the stock in the last 30 minutes saw a sharp fall in trade. Sonia, tell us more.
Thank you for that. Well, yes, Tata Chemicals is in focus. They've taken a price hike to the tune of 3 to 4%. This is in their soda ash product. And this price cut has come in after 6 months. The last one that they had taken was in the month of November. Now, Kotak Institutional Equities says that this cut comes amid falling soda ash prices in China since mid-March. Market has reacted to the unexpected news of substantial capacity addition in one of the geographies and major market, that is Mongolia, from 2023 itself. They see this as an incremental negative for soda ash prices, so that means there could be further cuts that companies would take across the globe. There are uncertainties which are remaining around demand and supply, and this is something which will need monitoring as well, according to Kotak. Soda ash business contributes around 15 to 20% of the consolidated EBITDA, and price cuts should somewhat be mitigated by lower coal prices that the company is seeing. So lower raw material prices will mitigate the impact of cut in prices as well. While Kotak expects Q4 to be very strong for the company due to firm realizations on US exports, the outlook for second half of calendar year 2023 is very uncertain and less clear. Soda ash realizations are seeing cut after continuous increase in last 2 years. So this could be a spot of worry for Tata Chemicals.
Okay, got that. Thanks very much, Sonal. By the way, the pre-open Nifty suggesting an uplift of around 70 odd points, and Infosys after yesterday's huge slumber, complete slam dunk, is up about 1%. ICICI Bank, Kotak Mahindra Bank, Reliance. These are some of the stocks that are bouncing on the upside in the pre-open. And the pre-open rates seem to suggest that the market really wants to go back to those levels of around 17,800. Let's see if this is how it indeed transpires once the actual opening hits us. Let's keep it to some interesting brokerage commentary that we're picking up from the street. Abhishek is joining in. There are some notes on affordable housing finance companies. What's the takeaway, Abhishek?
Well, Morgan Stanley has written a note. They have initiated coverage on housing finance companies. They say that, secular growth opportunity is there in a systematically important sector. So opportunity is significantly higher outside the top 4 cities and with disbursal ticket size of less than 25 lakhs. So space is niche, underpenetrated, has a secular growth outlook with pricing power and ESG positive as well. So thesis is that there is stronger growth outlook right now, and with asset quality which has been tested by COVID positive, valuations have derated and peak rates are inside. These rates are the interest rates. So valuations have significantly derated to reasonable or let's say attractive levels. They prefer Aptus and Home First Finance given the fact that it's smaller balance sheet in size and hence higher loan growth potential as well as better business run with risk profiles actually improving over there, and the current valuations also augur well for investors to invest in. So they have Aptus with an upside of 27% overweight rating over there. Home First Finance, the rating is overweight with a target price which is an upside of 25%. Aavas Fin, the target price is only 6% upside but equal weight rating because the valuations are already on the stronger side or on the higher side. And Canfin Homes, they have an equal weight rating. Target price is around 3 to 4% below the CMP. A much larger balance sheet, bank competition and promoter stake sale is a huge overhang on the stock. Back to you.
All right, thanks a lot for that. So those are a couple of more stocks in focus, but just wanted to mention, some stocks in pre-opening. The pre-opening rates are settled higher actually, up almost about 0.3%. Infosys is making a bit of a comeback, so that's interesting. Let's see, it's actually the biggest Nifty gainer right now, Infosys, up almost about 1%. So let's see if there's buying action after the disappointment yesterday. Angel One is the other stock, very good numbers coming through. The margins are at a 2-year high, EBITDA is up 20%, and Angel One is up almost about 4% and plenty of other stocks actually looking pretty good. Poonawalla FinCorp is also trending in the green. There's news flow there. Z Entertainment is up almost about 1%. Let's do one thing. Since, a lot of heavyweights are piling on the gains now, ICICI Bank, Infosys, HCL Tech, let's get some 9-10 calls going. Sudarshan is back with us and Mitesh as well. Sudarshan, what do you do in a market like this? Looks like there could be a pullback. Are you going to jump onto it? And what's the 9-10 call?
Absolutely. You must buy small intraday dips today and expect the markets to go up. So how you buy the dips is a different question. You can choose any method. There are many. GAIL is a buying opportunity with a stop under 105.
And Mitesh, how about you?
I will return to buy on EV Capital with a stop at 160 for targets of 175.
Okay, got that, gentlemen. Amisha, before we let you go, I wanted to get your thoughts on SBI Card. There's growth, but the growth is slowing down in terms of spends per card, also the incremental customers that they're adding. What's your view on the stock?
So overall, with more and more usage of other digital mediums, I think that there is no re-rating upside for sure in this stock. The growth will continue. It's a robust, high ROE business. I would be very neutral. We don't cover it actively, but I will be very neutral on the stock and its prospects. and not very strongly positive on it.
Okay, all right, got that, Amisha. Thank you very much for being with us this morning and taking us through a lot of that opinion. You have a good day. In fact, since we're talking about SBI card,